morning, everybody. This is Max Farrow. This is dexeffectsmarkets.com. Today is 420, and we are here doing some trades within our system. This is Trading with Max. Okay, let's get started here. Get in our little Discord room here. We're going to pull in and that's everyone. All right, here we go. We're going to get our setup on. We should already have our nadex. So now, listen, today I'm going to be showing you some things in here. So I'm going to be in my demo. My system's already trading live with the Xenon right now. I'm going to let that go for today. Let it do its thing. You can kind of see it's in here doing its thing. I think everything's in there good. There's no signal for the top of the hour there. So, all right. So we're going to scan down. We're going to be looking for our first trade. Nothing. There it is on the Euro JPY, possibly. Good morning. Let's see here. Get on there. There you go. You found it, Tammy. All right. All right. Let's start going down the list here. Today's the 20th. USD, Euro JPY. Now, the first thing you're always going to do, this is a teaching room today, and we're going to be doing some things and adding some stuff on. I am recording, so if you don't want to be your voice on the video, you can mute, or you can come out and ask any questions at all. Just don't be silly, because then I'd have to edit the entire video, and that'd be crazy. Okay. In this, we're going to be looking at a couple setups here. We're going to be looking left. You're probably like, Max, what's with the other moving average thing on there? Why are you doing that? And I'll discuss that here in a few seconds. Okay, so immediately we're going to be looking left, and we're going to pinpoint our zones, right? If I take all this other stuff off, if I just kind of move back and say, all right, all that other nonsense that's there, where are my support and resistance areas that you can immediately see when you just have the support and resistance indicator on? It's pretty important, right? We're always looking for peaks at that value, or the valley, the little valleys there, right? But we're also looking for secondary correspondence to that, right? This line here kind of gives us something called the pass-through, that it hits this top, it hits this little bottom, and it kind of creates that zone. This is a very good indicator for that process, because you can kind of see it also grabs here and here and here. This makes this a very, very strong support and resistance area. But when I put the Dexatomic back in a visual mode here, okay, we can kind of see that we have some correlation between the moving average heading downwards. We're in that trend, and this is a pretty strong value to be at, even though that we're at a on this particular trade, we're at high risk. I want to put that to medium risk. I want to put that to okay, and I want to kind of look at that value again in between the two. This is a pretty good indicator here that this is if I go to low risk and watch what happens. You can't even see the line because it's actually buried all the way up here, you see? So I would probably pick something in between when you have something this strong, because what is this trend going to be doing? It's coming down, coming back up, making a new, so you got this little high gap here, and then what it should do, if it has done it, is try to come down and create a new lower low. Okay, not so much lower high, you know, from this point. So if it comes back up, we want it to stop in this area, meaning that it's doing its job. If it keeps pushing through, we really don't want it to go higher than this, right? So that's why that's there. So I'm going to come down to where the moving average sort of presses that ceiling, that support down right about there, and that's a good indicator. So that's 130.66. So we're going to jump into Forex. We're going to come down to Euro US. What is that? That's Euro JPY. Let me refresh here. That's 130.66. I thought that's what it was. Yep. Okay. And there's 67. It's about the only one I got. I'm not going to come down to 10 pips to grab the other one. Come here. Put my, oop, almost did it. It's early morning. Plays more over. Now, I'm doing this too because I want to make this a teaching moment and I don't want to be distracted. I'm not going to trade my live money at this point. But I do want to show you a few things that one of the things that I've added to the process here is this 20 moving average. Now, we use a 50 moving average for the baseline. This is a nice, good indicator for a 5-minute chart for a 1-hour trade. The other moving average that I have on here is not to be taken lightly. It's a 20 moving average because it is a good action area of something that's moving quickly, right? And it's a good indicator of micro trending at that point, right? So we know when the price pulls away really far from the moving average, what has to happen every single time? It comes back to the moving average at some point, right? So we know that if we set certain indicators for ourselves, like the crossovers and, when the two are moving together and then you get a crossover and you got an arrow down below, there's a lot of little rules that you can set for yourself. What I'm doing right now is trying to use that rule set and find myself a little rule set. When the two come together and price squeezes into here, that usually means that there's going to be a move happening. Like it's pushing, right? And when they're both sort of making this little triangle process here, this little pennant mentality, okay? If you don't know what a flag and pennant is, there's something on our YouTube channel. Maybe I'll focus something into this into the description here for that as well.
Hey, Max.
Hey, bud.
Hey, are you screen sharing?
I am not.
You're
I
not
should
seeing
be. I
the
do
screen.
apologize.
Sorry.
That's all right.
Look at that.
I'm recording, but I'm not screen sharing. Go figure. Sorry, everybody in chat. Here we go. Okay, so it's really about, I'm on the Euro JPY. We're looking left here. And the biggest thing, like to make this very quick for you when you first get to the screen, you want to isolate where your high lows are at, right? Dynamically. You want to isolate your channel, your movement, your, hang on a second. You want to isolate your levels, right? And where they're at. But you want to have things that have not coincidence, but that they have multiple areas of the same thing, right? And it's really important to then start to establish, if I were to just take a box and kind of put it here, what is that box doing, right, over that period of time? If I grab my highs and lows, like we do with the Hilt box, okay? But really, it does come back down to price likes to create its own pressure. The moving average will show you how the pressure is accumulating. The more, like anything with pressure, the more you squeeze it, the more it's going to pop out somewhere unexpected, or it's going to go into a particular direction. Learning how to do that is all about experience, learning how the price moves. Each one of these pairs has a different attitude when you squeeze it, right? Euro JPY might be super easy to depict on which way it's going to go in micro levels. That's why the pip spread on the statements are 10 pips apart on nadex. That's why these what we call statement widths, are 10 pips apart, right? You'll see that on pairs on nadex that have more pips between them, they don't want you to have a bunch of, because it becomes very stable when it gets pressurized at times. So they don't want, and it's not a nadex thing, it's not a trick. It's the market makers making these contracts available. Okay, and what that means is that process of the market makers doing this, they're on the opposite side of you. Nadex is not on the opposite side of your trade. You're not fighting nadex here per se. What you're doing is you're fighting and you're battling against another trader. And whether you like it or not, a market maker is just a trader that probably, in any case here, has more money than you, right? And with that money, they've created an ability to look at different levels that have good high and low probability levels of how well a market can trade and if they can be above or below that line at that time. And that becomes, they are so good at it. And if all of you have been watching, what happens, the majority of losses that you get happen within a certain period of time to the end of expiry. Expiry has the most volatility at it at the top of the hour. Whether it be the market makers enforcing that or doing all that stuff. We've done exhaustive testing in the past on indicative, what we call indicative control, which is where they may slow the indicative down or close the gap of it. But what I've seen as of late, that there's been no craziness that way. This is truly the concept of the market makers being able to offer certain levels of statement at certain places and knowing how well they work. Okay, because they're creatures of habit in the human beings, right? So they know that this level will, not this particular level, but that a level may move, and it may have them a loss because they lose just as much as they win on those levels, they lose on those levels at a point. Okay, and it's all about the micro percentages that make them their money. Remember, you're worried about $45. They're worried about 45,000. Okay, so that's the true point when you're looking left. This is not about, hey, how can I get myself in this trade? All right, I don't care to get into this trade unless it's safe. I don't want anybody to sit here and think that, oh, if the Zedon is doing well or not doing well, screw the Zedon. I'm saying that here live on tape right now, live on tape. But I'm saying it here live on this show this morning because I want you, if you're here in this room right now, you're committed to trading live or trading manual. If you're not here to trade manual, then you can enjoy the show. But the point is that no matter how well you're doing in live or manual trading or demo trading, you have to consider that what is your time worth at that point. I know that. Is it David Minning in here this morning? No. I know that there is a process that David follows. And when you ask him, hey, David, what did you do to win that trade? He goes, I just traded what Max showed me, or I just traded what I've been trading all this time. He's been doing this for a very long time. When we were first teaching him, he would trade thousands of trades in a month, lots and lots of trades. Everybody should start out that way. Lots and lots of trades to practice. So I want to dissect some of this left hand and looking left process with us. In order to do that, you got to just get the experience of looking at these solutions. Your job is not to find a level that's so close to the sun that I could be able to get in. This makes sense. Here's what we tend to do sometimes. We look at the trade and we go, oh, there's a great level because it matched up there. And it matched up right here. Well, no, it didn't really match up there, right? This is a continuance downtrend right here. The first point of coincidence between the two matches, it's not even here. You see? Because if there was some sort of continuance in here of level, the support and resistance would have probably picked it up at that point. This is the biggest one here. This one and this one up here. The next one is down here. Because this line wasn't here when this line was here when this trade was happening. This was already here. It just didn't just show up just now because it has, if you see, it has value here, here, and it doesn't really have value here to it. Well, yeah, there it is. There's the value because there's a little pullback with a high. So it sort of looks at that situation, right? And it says, okay, this is a good strong level because it bounced off here. Now remember what I said. If I have a good strong line, a good strong support or resistance line, okay? Now I don't want to, secondly, I don't want to let you sit here and think like it's a support line. It's a support area. It goes over a particular area, and I'll discuss that later. But for now, this line was very strong. Why? Because look at the moving average. Look what happened with the moving average here. Both moving averages came up and it had a ceiling, right? And so what does this do right here? This creates pressure. Now there's two types of pressure outcome. There's continuance and there's reversal. That's all like a flag and pennant is. That's all this is really just a pennant, if you will. It squeezes down into like a pipe, like a baker's pipe, right? To where they make all those little fancy designs, but it squeezes it all the way down to a certain level. And then what happened? Pressure pushed out and jumped way up, right? Now, because this is going up, that's called a bull trend, right? It's going up. So this is a bull trend continuance, right? This compression here, oh, I didn't know I could do that. That's cool. That compression right there forced this push away. Now, what happens after it pushes away and gets really super far away from the moving average? Can anybody tell me in the room? Well, you can kind of see what it's going to do, so maybe that's a blind question there. It's going to push back to the moving average, to something close to it. Here, it pushes back to the actuating. That's what I refer this to as there's an actuator, something that helps me make a decision, should I be in a trade or not? And I'm looking for those, either trading those cases of volatility or using them as avoidance markers, right? Because if I pull back a replay back to this point, I don't know that this is going to squeeze down into this area again, right? And I don't know that it's going to squeeze down and push the sale down, right? Push the price down, because everything is still on the way up. But that's what usually happens. You get this huge push of pressure, a push up or push down, depending on the process of it. And then it'll probably start to level out, create itself a channel, right? And as it created its channel, let me move some of this other stuff out of the way here. As it created the channel, what did it do again? The moving average created more pressure and it pushed it out the other side. Now, this one is what? Well, it's more of an in a channel right here. And once you recognize that by this double top right here, should have told you at that point, hey, look, this is the story that's about to happen. We got the setting of the top, the setting of the bottom, the setting of the top, which is a double, we call it double top. And then it begins to bounce off of that. And the moment this bar fired and closed as a bull candle, it set this point. That means that this is now sitting in a channel. And then once this candle right here started to trend downwards, and this one was still heading up, this is where the pressure is. This is a very good trade to be at, right? This is a very good trade to be at as close as the head as possible, right? And what I mean by that is that you find something that is super close to this marker. Now, this is a sort of a gamble trade at this point, right? Because this is a high pressure, high risky, this is not a super risky trade, but it still has a lot of power to it, because if you can see this setup, if you can learn this setup and visualize that, you can then start trading it and be very close and pretty much get into each trade that you go for after these. But this is more of an advance. This is after you've been here a while. But I want you to start looking back and finding the story of where the trades start to build this kind of pressure and future result, right? And if you can start recognizing that pattern, then you can start trading at a different level. And these are some of the things that David uses and I use all the time. So David uses a lot of support and resistance areas, and I use more of how the story goes of the trade itself. Let's jump into another one and have a look. I hate when I do that. Does anybody have any questions so far in the room there? Now, I'm going to give you another piece of advice. If you have no information, you have no trade. Okay? And here's where if you're manually trading, is like trying to create something where there's nothing. You don't have a lot of information. Look at this trade right here. This trade right now. If I were to say, if I looked left, there's no information, right? But there actually is. See, some people try to look for information that's so hyper focused in this area. Like, how can I get into the trade? How can I get into this trade? This is giving you a lot of information, right? We had an event happen where you had the 20 moving average cross over the 50, right? It didn't really create so much a super level because there's no moving averages at that point, or no support and resistance lines because they're being developed. But this one line right there kind of tells you a story, right? And it says, okay, for the Euro USD at this time, if, hang on one second, there we go. If this is heading downwards, okay, we know that it has to, if it's going to commit, it's going to commit to this line right here. It's going to say come up and bounce off and come back down. I don't want to put a trade right here. Why? Because to the left, there's no real information there. This is the safety area, right? And even if I was like, all right, I'm a gambling man, here's what I'm going to do. I'm going to put it right there. I'm going to trade for that. Can it still come up and fall in between these two? 2050, 2047, right? Or 2046. That's 4 pips in difference there. Remember that. 4 pips. Can 4 pips make a difference to you? And the answer is yes. It can make a difference to you. Why? Because if we go into this, if we go into the Euro USD, oh, that's the Euro JPY, Euro USD right here. What's the statement width in this process? 4 pips. You see? It starts to make sense. These levels that you're seeing here, if you were to take and spread them out and try to really find where do they match up, I could show you, and I'll probably try to do that here in a little bit. We have an indicator that I'm polishing that shows you all the nadex statements within 1 pip on your screen in your indicator, so you can actually put it on your chart and kind of look at it as you're manually trading. This would be the level I would get at 2051 would be the area, something within that area. So 2051, there's 2050, there's 2054. So I would have to look at, you know, in this case, I usually tell you don't come into the trade, but this is so close, it's not even funny. 2051 to 2050 right there. This is where the level really is, and that's where suspected risk value is, right? So I'm okay doing that. So I'm going to use that one. There we go. Click that. Looking at 45 in place. Okay. This is a good practice trade to get into, is start to look at this process, especially going through replay, which we'll do some today as well. Let's go down and look at Great Britain Pound. Go down to USD JPY. All right, look at Great Britain Pound JPY. Just looking for another trade happening here. There we go. Now, just as much as there's not enough information to get in a trade, there might be too much information to get in a trade. And look where we're at with this process. You can already see the green lines, but I'm going to highlight them here with this big giant yellow line, right? This channel is like a battlefield, right? Just bouncing off the top, bouncing off the top. And look what's happening, right? We're setting up our story. What's our story? The pressure, right? The pressure of the moving averages showing the intent of pricing, right? It's trying to force it up into this area. And if it doesn't and it bounces off and it comes back down, it's going to try to create another low down here, or the moving average might curl over and try to create pressure down below. But my bet is that if this starts to curl up right here, this moving average comes up, in the next hour, you're going to see this kind of movement happening. Okay, this is a pretty big channel to be in for this time period. So would I get into a trade with this much Boeing, knowing that this is going up and it's creating that pressure and it's already had this level? This is a no. This is a I will not trade this trade. Okay. Now you can use, see, this is a low level there. At this point, I'm pretty sure. Dave's still not here. Okay. I'm pretty sure that if David would here, he'd tell you, well, I wouldn't use this one on the low risk. I would come up here and use this one, which is a pretty big, good bet. Why? Because this hasn't established yet. The trend lines here, or the support, or the moving average hasn't really been focused on pushing the price up into this quadrant yet. But this is a pretty good place to be at. But again, if you have a better trade out there, if you had this one or another trade up, and that one was a lot like set up like the Euro USD we looked at and had good, strong levels, this is just a speculation at this point. I'm pretty sure it's going to come up here and kind of stab up here somewhere and then maybe picked up. But this trade just would have been picked up already, right? Because we're sitting at, this is the Euro Great Britain Pound. We're 86.27, and where I would suggest to put something at is 86.30 area. So let's go over and look at nadex. Go down to, go up here for 10 o'clock. What did we say? 86.30. But look at the widths. They're 10 pips off, right? So that means I would have to go with either 86.35 or 86.25. And look what that does. That puts me all the way up here, or all the way in the crux of things. Do you see? So again, don't be forced to make a trade. That's a pretty tough area to be in, right? We're either going to be way up here in the super safety zone, and that's okay. It's okay to be up here. But we know where the true levels are. So I want you to start looking at your levels as you're getting in. This is not just about, hey, there's an arrow. Where can I put in so I can get into this trade right now? No. You want to see perfection in the setup. Okay, here's the USD CAD, little prima donna pair. But look what's happening again. See? It's setting it up for that. The pressure is being developed over a level, right? Where's that level at? This is, oh, come on, Max. That level's right up here. Right there, right? It's got that little top going on. The pressure's being made right there. Now, bull trend. See, this is what happened with the other pair that we were looking at that did the same exact thing. Right? There's your channel. The pressure's happening. Sometimes the pressure will push out and squeeze out and go up, which is a continuance, or it's going to do a reversal. This trade has not developed out yet. But see, this part's going against what I normally would do. If it was a sell, right? If it was a sell, I'd feel very confident at this level, right? But I like to see, if you've noticed, let me see if I can find the other one here. Which one was it? No. Oops, I have an error. I can't remember which one it was now. Oh, because we were back looking at another one. Yeah, this one right here. right? So we kind of know when once the area establishes itself for channel after a big move like this and it kind of vibrates, it gets back. It pretty much is going to tell you which direction it's going to go by how this 20 moving average is going to push, right? If this 20 moving average was keeping going up and they kept on moving and pushing up to this level like this, I'm pretty sure that it's going to push out the top, right? But when it starts to curl over, here's where the signal is, right? So here's where the curl over is. You get to see that. We kind of know it's going to push that level down. And with the arrow going down like that too, that's just a more so indicator. This is something that's good. But when I get down to USD CAD, it's doing the same thing, right? It's created its tops, it's created its levels. The moving average sort of curls over, creates its own top. This looks like it's going to be a push out to the down, which it's turning out to be. But we have a conflicting signal at that point. So I won't do that one. Even if it turns around and goes out and it hits up, maybe it creates a new low here, that's fine. But I'm not going to take that trade. Okay? Or if I am going to take a trade, I'm going to make sure that I'm not going to use any of the levels that we have. I'm going to come down to an actual support level, which would be here, right here. Right? Which would be 25.12. If I jump over to nadex, holy crap, they're 20 pips apart. So 25.07 would be. See, this is the USD CAD, 20 pips apart now. You know, market makers are a little bit scared when they put those margins out so far because it's tough, right? So now we're looking at margin from all the way up here to here, right? And if you look, they all start to, this is 20 pips, this is 20 pips. So that your job is not to make the market makers' jobs easier. It's start to spot these levels that are looking left. You're here to try to assert where's our best opportunity. Not to get in right now, but to be patient and disciplined. All right. This time we got a couple people in the room here. Victor, Trader Thor, of course. Welcome, Thor. Thank you. Does anybody have any questions? All right. Let's do this because we're going to be here for a few. I'm going to pause my screen share for a second. Who has a favorite pair that they like trading? Anybody? Nobody? Thor, you there, buddy?
Sorry, I had myself muted in case I sneezed or something in your ear.
No worries, no worries. This is an interactive place. So, I mean, if you guys, it's cool that you
Yeah.
just come in and want to watch and listen, but if I'm saying all the things that you already know, maybe somebody here doesn't, or I'm also recording this too, I understand that. I'm not here to bore you either, but I'm also not here to force trades in. What are some of the weaknesses or the problems if anybody's having any? And it doesn't matter if you do or not. What's the biggest challenge that any one of you have? Thor, why don't you start it out, and then we can maybe fill some other people in here. What's a big challenge that you have when you're trading at these levels?
Guess I would have to say is selecting the right strike.
Mm-hmm.
Looking at the support and resistance and then finding the right strike, being able to nadex.
Mm-hmm.
And you know, analyzing the support, the resistance. Um, so that's my biggest problem, our biggest challenge. It's always
Hmm.
a challenge, I think, for me.
Right. Well, I think for me, my challenge is the same thing. I think everybody has that. Which one do I take? Did I come in too close, or did I stay too far away? Or if I would have came in here, or if I would have went out there, the the process of selection should always have two or three. Just like we look at when we look at support and resistance, right? We don't just go, "Hey, here's a bar. It looks like it went down. Oh, it went back up again. This is resistance," right? That's not really resistance yet. A good strong it is to a degree, but like at a micro level. What we're looking for are areas of known resistance, of duplication, of why does it keep showing up at that level, you know? That's the true part of trading is where can I find coincidence in a particular level to be on and support, knowing that, you know, why is this line here on this particular trade so far away, Max? Well, yeah, but the hilt box of this was huge because there was a big push. But once you start recognizing the levels of how things push, the best way to choose the level on nadex and choose the statement is to find where it matches up with all the other lines that you have, or very similar close, or very super close to that process. Not so much somewhere in between. You know, what I'm looking for is something that's super close to a process, right? We call about trading the mean. You know, that's the mean of in between that zone there, right? This is a support and resistance zone. But if I can start looking left and seeing these areas of pressure, right? We all know what a trend looks like: higher highs, lower high, higher lows in an uptrend. We know what the moving averages do, right? They just look over the past, whatever the number is. If it's a 50, it looks over the past 50 bars and says who's winning more. And if bulls are winning more, it's going to show an up pattern, right? This is a good overage of the process. Now, I'm not going to try to create a Christmas tree chart for you, but there's the Bollinger Band process. There's all these different ways out there. I'm not looking for you to go try to find something to get in at that level, right? But I
For
want to
the
show you just
record,
what's that?
I was going to say, for the record, you're using the validated low risk.
Yes.
I
Well,
forgot to mention that.
I'm using the validated low risk because as many trades as there are out there, there's still validational solutions for me. Like I always look for following a trend, following that process. You know, I have to set myself a set of rules. If I try to use all the validation rules in there, I'm going to be here for a dog's age, right? And I've been trading for 7 years, and the simpler I can make the tools, the better. Make sense? So I really try to create, just give me a set of rules that I can follow. So we have a 20, a 50. If I were to do 100, what would it look like on the chart? There it is right there. Let me change the style here. Make that one yellow. Give it a give it a life too. Okay, so now we got this bright ass yellow thing, but the as everything starts to flow, a true trend is when they're all what going in the going in the same direction, right? If you had something like this, not saying go ahead and do this, but when I was young in trading, this is a setup that I would use. You know, I use a MACD. I would use some other things to tell me about movement. But this is really a very strong process when all three merge together and become a force like between here and here. It's starting to move up, and once it gets into this trend, this is probably a pretty good indicator on trading tightly on the buys here, right? This is a good pressure. And then as things start to create pressure going in, we kind of know that it's creating this pressure. Why? Because it's created some levels, right? And even if we just use the support and resistance levels, that level right there, and it sort of created this channel for it to be in. What happens when that channel finally gets to, all right, I don't want any more, right? What is it going to do? It's going to spit that, it's going to spit it out. And as we know, it spits it out usually in the direction of one of the slower or the faster moving averages, right? Because this is kind of bulbous and just kind of the top of the hill right here. I mean, you could easily just go up, but it tells me between this period and this period that as this starts to curl over, so remember these are 5 minutes, right? So this kind of, as soon as this starts to curl over at this level right about here, you got about 5, 10, 15, 20, 25, 30, about 30 minutes for this to develop. Now in this particular one, there's no trade in there. There's no signal in there. But look what's happening here now, right? Has it created another level? The answer is yes, right here. From the previous trade that happened to this trade right here, we know that if a signal fires right at this point, look what it's done. It's created it's created its level right here. Pressure, pressure. Now it's pushing out for a reversal. Okay? So learning little tidbits like this, I say tidbit, this is a pretty big process. Thor, did you know much about this pressure of the moving averages and creating areas like this?
Yeah, somewhat, but
Mm-hmm.
you made some good points. It's something I usually haven't been looking at.
Mm-hmm.
I need to start looking for.
And again, you don't have to have every single moving average on. You can basically tell with some of the ones that we have on and some not, right? You can. That's a 200 in there. Oops. Okay. If I just grab one moving average, maybe that's a 20. Oh, not that one. There we go. Even with this, right? This kind of gives you a little bit of an understanding of it, and you can kind of see, but you really don't get the feel of the pressure. Not sorry, that's the nadex one I was telling you about earlier. Oh, there it is again. It is again. There we go. You really don't get it until you put this one on, right? You really don't get that feel of pressure, because look what happens, right? As soon as we're getting into this pressure zone, it's pushing it up, and it goes and eventually goes and breaks that level. Remember, it doesn't mean squat until it breaks one of those levels, right? So look what happens from this point to here. This moving average is pushing upwards. See, so it squeezes it out, and look, now it's breaking that level. If it doesn't, the real indicator here is at the top of the hour. If it's up and around in this area, and it makes that push, this area right here, and the arrow comes out right around in here, then this is a good trade to be at a moving or wherever the area comes out. Let's say if it's low down here, you want it to be at this zone area. You want a statement somewhere in here, because it's going to get a little resistance right above and maybe push back down and go on. But if there's enough pressure, this isn't a lot of pressure, right? You can kind of tell it's sort of just a reaction to this push down here, bounce around, and boom, and back up again. And the ultimate, if I squeeze it out and I look this way, you see boom, boom, boom. What is it doing? It's making an overall trend with the 200, right? Higher low. Here's a higher low from here. This is the trend. Top, back down, boom, back up, drops back down, but it doesn't go to the low past the low over here. You see? So it's creating this little life here, and then it's going to pop back up. What it's going to try to do, if it wants to continue on this massive trend that's happening over a period of time, then it's going to try to end out up here, maybe drop down a little bit and go up. Or it's going to try to come up here and stay up this way over the next couple of hours. All right. Okay. So far, with this idea of pressure, is there any questions of the moving averages and what I've shown you on the trades today? These are all just suggestive tools to have. I trade with the 20 now. I've taken a little gravitation back. I don't lay on the signals as much as I used to. I really do look at, if I can't see one of these markers in it, right? I can kind of trade with just looking at the levels. But once I start seeing these developments of the pressure and where they go, this will also help me get a good idea of how well will a signal do. Right? I'm in unvalidated mode right now because I'm showing you trades here, right? Like there's, if I click on validation and I click OK, I remove a lot of that noise that I normally would see, right? That I'd have to guess and speculate about. If you want more noise, then you can add the other things, but you got to be really good. The best trades that we have to date, which David Menning uses all the time, is the moving average of 50 with a support and resistance with validated signals on and set to low. And if he gets any indication of volatility in the market or anything else, he'll look at his low risk level and he'll push it down to the next level down. I just won't get in the trade. He puts on a lot of working orders. I don't really do the working order thing, too many working orders. What I like to see is I know the market well enough. All right, we got into one of the trades here. The Euro USD looks like it got picked up. Let's go back and have a look at it and analyze it. See, got picked up at the level that we suggested, right? Why? Because what is it doing? It created the pressure, had the pullback, right? Here's where all the pressure was sort of pushed into this level right here. It pushed out. Now, we'd be winning if we went with that other liner. Remember what I said? We can either come up to this 2150 or all the way down to 2146, whatever it was. But it came back up and grabbed our trade. Where did we get that at? 2150 or 2050? Yeah. See, so right about there, we came to right there. And isn't it weird that happened 15, 20 minutes ago? We didn't even come back and look at it again. But it's starting to fill that out. Now, it could still take the loss. We know that, right? Excuse me for a second. Okay. So we'll come back to that in a minute. But we've... you going to do that? We can kind of see that it's starting to fight in this area a little bit. If it's truly going to be a trend, excuse me, then it will start to collapse here. This next bar here will kind of tell us a lot. If it turns red and starts to drop down, then we're in the zone here for this to do what? It's creating this little lower high level, and it wants to kind of trickle on. But if it comes up and contests this area and really pushes it out, then the trade could be in a little bit of trouble at that point. And that's where you have to begin to ask yourself the question, do I scalp or do I not scalp? And that's the biggest question that I get amongst a lot of people, is that, do I scalp or do I not scalp? If anybody here is a proponent of scalping, even though I said, hey, don't scalp, keep it to the end, do whatever you got to do, there is times that I will scalp. And a couple of those, which we'll talk about right now. In a value of percentages, we're at $45 per trade, right? For our profit value. When we say 45, 55, what we're actually talking about is that the sell side is 45 and the buy side is 55. But the actual value of the trade itself is the risk is $55 and the profit is 45. Well, after fees, 43. So what I look at is like, why do they offer what they offer on the system here, right? So our price that we bought it for was $45, right? We bought it for $56 in the risk, but our profit margin is what I normally refer to. So when I say profit margin, I'm talking about the $45, right? And so then what I look at is that I say, all right, how much could this get to make it like a good deal for me? Right? Like, what do I want to be at for it to be a good deal for me? And so the market makers will never, ever, ever, well, I can't say never, I've seen it a couple of times. The average of what they offer into this segment here, if it's like really far into a trade or what have you, is 70% of what your profit margin is, right? So that's something to kind of look at. Do I want to take the profit and kind of move into that? So if I have $45 and I do that times 0.7, that's $31, right? So right now, I'm more than 70% into my area, right? I could easily take this trade and feel comfortable about it. But then my numbers get a little skewed at that point, right? You have to be prepared for that. If you're doing like super, super well and you're like, well, I could have taken a profit and maybe saved that trade or what have you. At these levels, what's 36 of the 45, right? This is like about 75% of that profit margin. Is that right? Let's see. 45 0.75. It's more than that, right? So when I say never, ever, ever, they just proven me wrong in one video. It usually will go between 70 and 75, but when they really start getting up there, that means that there's a buildup of volatility. They're trying to get people out of the market to get other people in, to get to that last side, to get at the higher numbers or lower numbers or whatever they're trying to do. I don't know what is it that they're trying to do at that point. All I know is that I never value the profit loss areas here like this, like, because I know that there's opportunity to stay on. One thing I do tell everybody about that solution is, if you're going to learn how to scalp, don't just scalp the green. Learn how to scalp the red. But the red, you're not going to scalp from red here. You're going to scalp from you knowing the trade's failing. Now, how would I know that the trade is failing here at this point when we're so close to the vest of the process moving, right? Well, I know that this, let's go back to the chart here. Let me just take everything off here. I keep putting that thing back on like I'm showing you something. I know because it's still gravitating in this area, this thing likes to lose at the last second, right? That these trades like to lose. And we're only 2045. We're about 5 pips off, right? What are we over on nadex here? 2045 to 2050, right? And we got 4 minutes left. It can still go up and lose and do all that kind of stuff, right? But the averages for me is that everything is set up. Everything looks really super strong. Why? Because this is what we look for when we're picking our trades. This setup that comes in and is very strong, that's following the trend and doing its thing. There's no news, there's no other inception. So I'm going to stick with this trade and I'll live with my decision. I won't woulda, shoulda, coulda. I won't say, oh, I should have taken the scalp out or anything else. So if this loses, this is a real super loss. This is a regular loss. And I don't care at that point. But if I push it into the trade a little bit and I say, okay, well, maybe I should, then I know that I made the mistake. So I don't really count it as a loss. I count it as experience. And here, I'm just going to let it go do what it's going to go do. So learning how to scalp, God, that looks really pretty, doesn't it? $37. That's got to be like 80%, right? When did they start doing that nonsense?
They must really want people to close their positions,
Yeah, right?
save themselves a few dollars, $10 or whatever.
Yeah, I know.
Like
Well, see,
expiration.
yeah, that's $7, right? Yeah, so that's $7. So when they get really hot and heavy like that, you could take the trade. You want to help them out. You want to make line their pockets a little bit more. That's up to you. But because that the trade was set up so nicely, like it followed all of our rules that we wanted to follow, right? Kind of sets up nicely on the chart. I'm not going to scalp. And if we would have gotten tricked in the beginning and saw the 36, guess what? You're now like, how many pips are you in the real now? You're 10. So you would have missed out on $7. Now that may not seem like a lot to you, $7, but if you lose a trade, then it's more than one trade you got to make back up. It kind of puts us up into that realm, right? And yes, I am on demo because there's certain things that I'm training myself for right now. I want to be able to sit and do these trades with you and sit here with you and show you all these little areas to be in every day. And some of you are like, oh, God, just shut up, dude. I just want to see you trade. You're seeing it. This conversation I'm having with you, I have in my head every day when I trade. You have to start looking at the process and start trading the talk that is in your head or my head, or maybe you guys are all just fake and I'm the only real entity here. I don't know.
See, David M. joined us.
Good morning, David.
Good morning.
So at the top of the hour, we're going to try to go find another trade. But we got into this one, and it was very strong. It followed all of those rules. The Euro JPY did not. How close did it get? 130.67. See, and even though that we pushed it out, you're not going to say, okay, well, maybe I should have pushed it out here. Why didn't we push it in and come down to this level? Well, because it hadn't been really created yet, right? Remember, we said we didn't have a story to the left to follow, so we had to follow the story from a long time ago with it. So we came back up to this level. And even though that I really did, I probably maybe shouldn't have put this trade on at this level, right? But I was seeing other things to be a part of, and we came out to, was it one? What did we put that one on for? 67. So you see, and we came right in between where this double green line is for support and resistance, and we were safe. Yes, could we have pushed it in and all that stuff? Yes, but I don't think it's necessary to try to find every micro reason to trade, right? Like this was a very good strong way because what we wanted to do is come up and push to it. Remember that these lines are considered what we consider zones, right? And how do you find that zone real quickly before you find the top of that and sort of where it kind of extends like that, right? And like that. And that's kind of the zone there. We could have pushed into the zone a little bit, but I didn't. I stayed right at the line, like in the mean of it, okay? And that, my friends, is a winner there. So 1-0 this morning. All right. Let's jump down the line again here. All right. Remember what we said about the Aussie USD here is that we've had this pressure. And let me get the moving average on. I still did it again. Guys are going to be like, hey, what's that? So here's the pressure there. That sort of blended all in together, didn't it? This only makes me a little nervous because this is super flat, right? Like I would really want to see it like it's curling up here. It pushed out here. But now that it's super flat there, I may not look at that one as a trade. I may let that one develop. Remember that the time to strike is when the iron is hot, not when the hour is high, right? You don't have to always, as a manual trader, you do not have to go run and get into the trade. If it doesn't have like a perfect setup to you, if this like, this is like sort of stay out. You're here to protect yourself. You're not here just to get into every single trade. Let's look at the Euro JPY. The pressure was committed to. There was no. This is the box here. It's a nice little channel run right here. Even though it's still heading down, but we're now in the trend. It's already committed to its pressure. It popped out the side. Came down to here. Now, this is sitting. This is the level we'll be up at here. And this line right here is a good indicator of a top and a nice little support area. But what I would really like to do is to kind of stay up around in this area up here at 130.66 because I don't think this is a perfect setup. This is a pretty strong line as well. So somewhere in between here and here is where I would like to see my price. But again, this is a 10 pip run on a Euro JPY, 10 pip statement width. So again, I'm going to come back to the Euro JPY in a second. Our trade filtered out good, came back up, grabbed what it's going to grab. There was no single in the Euro USD. Nothing on the Great Britain Pound USD. Remember, I'm in validated mode only. Now, look at this process and how it really plays out, right? This is really super strong. Once it commits and really does create a lot of pressure and pushes out like this, even though there wasn't a signal here to depict a good opportunity, it's really pushed far past the moving average. And what do we say about the moving average? Price has got to come back to it, right? Even if it's just for a touch to reconfirm and then head back down and keep doing its thing. So we don't want something that's down around in here, right? We don't want to take a signal or a statement price down here, right? Here's where that we think that moving average, everything is going to come into play, right? Remember, in order for the trend to be reset, it has to the yellow 200 moving average has to come up and be above, and then the 50 and then the 20, right? So the 20 will be on the bottom, the blue will be in the middle, and the yellow will be up top. So this is where all this is happening. And this is a good spot to put our trade is right here at 108.37 on the USD JPY. Fresh, grab 11. What did I say, 37? 130, there's 37. Oh, it's 137, 8, so that's not too bad. Okay, so 138, there we go. So we're going to put that there. 45. Oop. What the heck happened there? That's not a price. 45, there we go. No place order. Remember, this is not just about getting into a whole bunch of trades, just looking at the reaction of this. Okay. We'll look at a couple of the secondary pairs here. I have to feel really good about any one of these coming in. Remember, too much information. Let's see if I can squeeze this down just a little bit. It's got a nice, slow moving up, right? The three are looking good. This could be something that's pretty decent. Now, where would I place for extra bonus points today? Would I use the 86.25 area, which is right here? Would I allow this to be that to be my level that I would work with? Because remember, what has it done so far? It's created another top area, right? It's already committed here, right? And it looks like it's validating that. Boom, 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 right? So this is committing to what? More pressure in here, right? And we don't know we just don't know yet. And just because I can put something here doesn't mean I should. So would this be a trade that anybody would trade right at the moment?
I probably would not take that trade at this point.
Well, it's committed to a pretty big zone here. And because we know that it can have a couple bar movement, right? Consecutive bar movement to push things out quickly. We know that the pressure is moving up. Everything is sort of committing to going up. This could be something that I could get into if I was like doing more high risk trades. But if you don't have a good feeling, if it hasn't fully developed yet, stay out. There's no reason for it. Why? Because it can still, anywhere in here, still play a game of, hey, it could go from this point to this point. And how many pips is that? That's 86.23 to 86.30. So there's about 7 pips into that difference there, right? And then if we go in here, what pair is that? Your Great Britain pound. I want you to see something. Remember, that's a 7 pip channel, and it's a 10 pip statement price, statement width. You see where this is going? So they know the system well enough to say, okay, it's 10 pips in between, but look at this channel. It's just outside that range. This channel that they're in right now with this pip control, pip width, or statement width from that process, could easily adhere to that and pull off, right? Look at that. This almost creates like a support and resistance zone, right? This is a statement level. Kind of works exactly like, isn't that weird? Look where all of our support and resistance lines are. Isn't that weird? It's not weird. It's actually pretty methodical in what we have done to try to find out what nadex is doing. We can't commit to doing this part of the process with an automation system. The real power for all of you is trading this manually. Let's have a look at the Great Britain pound JPY. We're going to look left. Is there any power struggles? Is there any pressure happening? The trend's committing with a 100, a 50, and a 20 moving average. Everything's lined up. Everything's looking good. It's creating lower lows. This is a nice little good trend area. Now, if we're looking at the committing of lower lows and lower highs at this point, this would be a level to look at. And this would be a level to look at, right? Because what we're looking to do is that this is the lower end of the trend, and this is the high value of the trend, right? Lower end, remember, because we're committing to lower lows and high and lower highs, right? Now, the value of a support and resistance line is that it has two sides. The top side support, the low side's resistance, right? So if this is the lower side of the trend, this is going to be super weak. It could come up here and do this, right? It could come up and bounce to that. But what I want to see is that if I go over to nadex right now and I look at this lower end trend here, right, this lower end side of the trend value here, and I look at 151.31, and there's a statement price right at that, I'm taking that, right? But I also want to be very close to, in this area is here. See how like we have our risk area here is right at the moving average. This gives us a very good indication that this is a good marker to be with. Why? Because the price is eventually going to come up here and do that. If it's going to continue to follow the trend, right? Or somewhere in this area. So I'm not looking to make a trade happen down here because I know it's going to do that, because it's going to push it into volatility and then come out. This is a nice OTM process possibly. Or the power is with the people and it's just going to keep rolling down and just keep going, and it wouldn't even get picked up. But it also wouldn't lose at that point. Okay? So if I was going to do a trade, you could do something. I won't, because I have a good feeling that it's going to just kind of collapse out and kind of fall down at this point. Because remember, this has a pip width of, let's go down and have a look. What was that area? 31. Look at that. Okay, so 37, right? So I'm not going to take this one. Why? Because 27 and 37, let's go look at where those are at on this. Here's 37 up here, right? So that's a good one. So this one would validate my area here to protect myself, right, David? We always try to protect ourselves in our trades. This has good.
Correct.
Right. This is like doing it in this fashion when you see the coincidences and the suggestions. It's like when you have a friend who says, "Hey, did you see that movie?" And then a couple of days later, somebody else says, "Hey, did you see that movie? It was pretty good, right?" And then you're like, "Oh, I got 2 friends who said that. I got to go check it out," right? This just backs up. It's another point to be in the trade at that point. Now, if it was different, if there was it was all the way up here, even though that's safe, it's just a big waste of time and resources to have that much money on the table, for something to go crazy. I'm not trying to emulate exactly what the market makers are doing, but I'm trying to see where their setups are compared to where our charts are. And when we have those meetups, it's more likely for us to win than it is to lose at that point. So we're closer to winning than we are to losing because we're seeing the zones that they're trading. Now, where's the 30 set? Where's the 27? If that's the 37 right there, which we put on, where's the 27? The 27 is right here, which is also another good level because we got the 20 coming off. Yes, we could do that, right? But again, this is pushing into the trade a little bit, into this unknown zone, right? We could see that this zone has here, 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 as this is a backup. Remember, this would be our zone, right? That would be our zone. Where here doesn't really have any information, right? No, it could all the way to the left. I could be proven wrong here in a second. Oh, yeah, look at that. Little crapper. Look at it. Matches up exactly. 151.27. 151.27. Now, I'm in demo. This is a good time to talk about, do I trade something I normally wouldn't trade live in demo? And the answer is, hell yeah. Just don't lean on it. I'm doing this because I am looking for reasonings. And when I find them even live like this, I could see that. Right? I don't think it's going to get up. Like I said before, I really do think it's going to keep going on. But if it does happen to fail in this process, it's got to come up here to break this, right? It's got to come up, touch, break, because there's so much power here at these levels when all three moving averages are moving in the same direction. It's a lot of power. Okay, let's look at the prima donna pair USD/CAD, and there it is again. Right there's that pressure that was committed to here, and what does it have to do? It has to kind of come back to push into that moving average again. I don't like the USD/CAD, but is what it is. Kind of thing. Oh, because the 100's all the way down there. All right. So there's a little power play happening right now within this. Look how far the moving average is there. Okay. Kind of started to set up. So we're getting this power play. We need this thing to kind of fill out over here and be finished with it, even though that it is sort of creating more pressure here because you're getting these levels. Remember, we're trying to, the moving averages or the thing is already there, right? This support and resistance line right here is already there. See, so it's committing to another area of contention. It's going to squeeze it all into here, and this is where I think we're going to get the power shift over, where it's going to flip it, right? It's going to flip it and kind of squeeze it out, and it's going to come down in this area. I'm going to call it right here. It's going to end up, let's see, at noon. I don't know if it's going to make it to that by noon. Let's see. Let's say right about there. I may not make it. We'll see what happens. We'll check back later. USD/CAD. And the USD/MEXC. It was there. But take a look at that. Do you see the power here of this pressure? Look at the top. Look right in the mean between these two lines right here. What happens to the moving average? Look at it. You guys should be really, really super stoked at this point right now because you're recognizing a very strong pattern in every pair. Look at that. Smacks it out, pushes it out. Now, because the arrow came after the move, right? Like if this is like really squeezy, and it's like really right down in here, and an arrow comes out up here, this is a really good area to be at. Is that if it does fail, it's going to fail up here. It's going to try to contest. If it does continue to come out, it's broken. If this comes out, if the arrow is right here, just starts right there, and then it comes up here, it's broken. The whole pressure thing is broken for another cycle. Okay, but since it came out all the way down here, where would be the level of resistance now? Right here. This would be that level of resistance. This would be our strongest line right here. Because you have all this pressure happening going down. It's forced its way out, but it's got to come back up to the support and resistance area. And look where our line is at. 86.20. Now this is the maxi. I'm not going to trade it. This pair is very volatile for me. But it still operates in the same value. Any questions? David, did you take any trades this top of the hour?
I did not.
Okay. No worries.
I was watching this.
Oh, okay. I don't think we got picked up on anything yet. No, we still got 2 on the board. All right. So we've covered a few things today. We covered the value of this spotting the channel, spotting the pressure. This is a nice little setup. If you like it, if you can handle this much stuff happening on here, great. But it's got some pretty powerful things on here. Okay, the first one being the 3 levels of moving average. And what do they mean? What are they doing? Right? The 100 is really giving you that long-term, this is 100 bars, right? Doesn't really seem like a lot, right? 500 minutes. But that's still, in this world of life, I mean, if I were to go to a 1 hour chart, it still represent the same thing. It'd be 100 hours. But those levels of drilling down from higher end charts is something I used to do a long time ago. But we don't have to do that here because we're living in the moment. We're living in 100 bars, a nice little downtrend. We can then start to see the counteraction of the movement of the market, right? The 50 moving average is a nice solid base of average between the two, right? Pretty close. But they all mean something at that point. They all mean that when they're all in the right direction and they all start to squeeze together, that pressure has to yield to a very forceful result. When they all start to really squeeze together, especially when they start squeezing together, the first two, the big one doesn't really we don't have to worry about that so much. But when they really start to squeeze that pressure in, we have to find where is that pressure at. Right? Like right now, we know that they started to squeeze here and it started to do like this little push out, but then where did it go? Went really super close to the moving average and it bounced off, but now it's creating another set of pressure here, right? Do you see it? Kind of faked us out a little bit. It's kind of stayed at that level. Squeeze. It proved everything right, but there's no signal in here. Even if we were to stay right here, look what's going to happen. It's going to squeeze into this area, and then it's going to push out. And because we're flat here, right? Because we're flat right there, we don't see a trade over here, do we? Because we didn't have the confidence in this that was giving us a true signal at that point with that pressure in mind. If this pressure wasn't here, I'd probably be looking at this process and saying, okay, this is a good level to be at, but I'm gonna really put it all the way down here. But look what happened. That was super close. Kind of came to there. It would have gotten picked up. But what level would it have been at? We were grabbing 77, 73. Let's go ahead and look at. There's 74. Right? Not something really to push in, because what is happening, since this is flat, it's not really giving us a good indication. So this is like a 50-50 trade. I could put it on and it could win and I could look like a freaking superstar. But we know is that if this becomes a lot of pressure, remember what happens with the pressure? Where does it go? It's got to go one way or another, right? A good indication is which way is the moving average pointing at that point on the 20. And we don't know. So don't trade it. Even though that's like, oh, Max, come on, it's an arrow up, we could do that. Then go grab a demo chart, go grab a demo and see if you guessed right. But at this point, you're still guessing. When this presents itself again, the outcome could be different. You have to start judging every single trade that you do with that kind of malice. If you're unsure, stay the fuck out. Even though all the little pretty lines tell you, oh, yeah, this is a good level to be at, probably come out in a, no. You could probably do some what David does too, is that if you're unsure, maybe not stay out, but push back, right? Put a level down here. But even with that, with all this pressure heading down on a buy, you could still get contested and push out and come down. We have 36 minutes left. That pressure could build here and shoot you downwards as well.
Hey, Max,
Yeah, but
I always say when in doubt, go out.
when in doubt,
Meaning
stay
go
out.
out
Absolutely. Oh, go
or
out.
stay
Oh, I
out.
get it. I get you
Well,
now.
I'm not-
I misunderstood you. I apologize.
Or sometimes stay out. Yeah.
Yeah. When in doubt, go out. Which in David's mentality too is like push your trade further out. Push the statement price further out.
Correct.
You know, a good quest for all of you is to grab the replay time and go back into history and see where those levels where you start seeing the levels meet, and what happens when they meet. Do they create channels? Find the channels to the left and see if they like right now in this red zone that's on this one right here. We can kind of see like where these two yellow lines are over the red, right? Doesn't really commit to a channel, right? But the spot where the yellow and the other two, okay, right here, is in between that channel. That pressure has been pushing up against here, even though it kind of came out, you know, but I want you to look back at something. Watch what happens when I do this. I come to here and look at that. It's committed to a zone. That's the zone. This is the zone of that support area or that resistance area right there. But down here, the zone is a little bit the same thing. We're going to use this zone right here, right? Kind of committed to that. Why? Because if you take this all the way back to here, this is a wing, if you will. This is you could probably even extend it out to here to be the entire zone. Go back and start looking at these. Look at history. See how things set up. Start visualizing how these things look. Why is that? Because you have this little push right here. You have this big giant push out. There's no bars until it hits here. This makes this a nice good zone. That's why the green's there. The red is there because it knows that that's the top of the zone, because right here, right? Right there. Look at that. Perfect, right? This line was drawn right here at this time period. wasn't drawn the moment that this happened. This was drawn at this time period. That's how powerful it is. It's predictive. Why? Because just like a good meteorologist has hundreds of years worth of information, from Farmer's Almanac to whatever they use now, Doppler radar, all that kind of stuff. They have all that information for them. And they still only get it right 50% of the time. Can't please everybody, I guess. But this contention that happens here, this pressure, shows a result of pushing out, comes back down to the moving average, slowly filters out. Here's another channel that happens right here, this little channel. But this is not really a lot of pressure in this channel at this point. This is just unsuredness of the market. But as things start to fold, what happens? All three are in a row. Now, would you ever come off of the lower, the high, or the medium risk? The answer is yes. But you got to have it set up in a way that all your ducks in a row. On this particular trade right here, are all in a row. Do I have to come back down to here? The answer is no. You could possibly look at another level here, right? If I switch this over to medium risk, really doesn't change that much. Okay, gets a little closer, doesn't really get to it. I'm not trying to make this trade work. That's not my point. Once you start pulling away from the 20 moving average like this is all sort of not a guessing game, but you don't know when this is going to happen, when it's going to start to come back. But at this point, I wouldn't have taken this trade either, even though that if I would have came super close, Max, I could have won. If I would have put it here, that's an OTM. Right? For you OTM traders, that's another system. If I was around at this trade, this is something I would have looked at. Good level, good level. I'm at a 50-50 trade at this point. I would put $50 in that thing. If this signal fired right here, I would look this as a level. It would be OTM for me if I was right here. But the statement probably wasn't right there. It's probably more up here. I would look at this as a possibility. As an OTM trader, you're not looking to do this right now, but as an OTM trader, this is a great setup right after contention, right like this. Pressure creates, unsuredness, then finally commits. Once it gets to this level and it's broken here, I don't want it to see it break here, right? If it's already gone up here, there is a possibility that this is now treated as support and it's going to go on. But it doesn't say there's a lot of pressure to push past that. I would want to see it here, see support here, knowing that I'm probably able to pick this up for about $60 profit at this level. And there's a great possibility for success, which it does. So as OTM trades going, that's a different class, right? OTM trades are great right after what? OTM trades are great after channeling, pressure, or exhaustion, right? This trade comes out. We know that this is a buy, so we're probably not going to trade at that level. There's stuff that I could show you that, trading this process, finding opposites in these levels. Like this is a big, huge movement. That's why the arrow appears, because it's showing a movement. But the movement's too much, it becomes toxic at this level. Like I would never trade this trade, this one right here. With this much movement away from the moving averages, this is exhaustion. This is that point where somebody throws a rock up into the sky and they're like, look how far I threw it. And then it's just like, I ain't got no more. And it's just going to slowly come down and bounce and then create the pressure and then push down. But if I was an OTM trader at this point, there'd be no opportunities here for me until where? Until we commit to this line right here, right somewhere in this area. If there was an arrow of movement, this is where I would create an opportunity, like right around in this area, because we know it's going to move back down to here. So I'm looking for something that's just a little bit further out of where my stuff is happening. So if I get into something for like $40 risk, right around in this area, has a pretty good opportunity. If I pick something up out of this movement and there's opportunity, and I'd say I pick it up for $40 worth of risk, how right do I have to be? Let's talk about that for a second. What's my percentage of accuracy do I need when I pick up a trade for $40 worth of risk? Any of you math geniuses in there? If I count fees in it, I only have to be 41% right to break even. 41%. A monkey with an abacus can do just as good. But you got to recognize when the pattern's in. You don't just look at a pair and go, "Oh yeah, it's going to go down, so I'm gonna put possibility of doing it down here." Like you wouldn't do it on this particular trade right here. This one right here. Right. But once the system starts to commit, like there's the yellow, it's up, up, it's everything's in line. Here's the trade. Put our support up here. We get our trade on up here. That's for our regular trade, our 45.55. And once it commits to the process, once it's relevant there, if you were to try to do something, this is trying to squeeze it in the last second, right? So you wouldn't put it, I don't think you'd get a $60 closer to here. I don't think you'd get a $60 profit margin here at this point. Like if there's a trade here and this is where you did it at, there's not enough movement there, enough time expiry for that to happen. But there is a lot of opportunities after heavy pressure, the committal to a channel, heavy pressure, once you're able to recognize that, and that big push and trading OTMs. I think I'm going to have a special class. I don't know when. I think we're going to start doing these helping classes to where we're going to show you as manual traders how to do what we did today, how we worked with the process today. Like Great Britain Pound JPY is the only thing close enough to do anything with. Does anybody here in the room feel that they're missing something from what I got today? Is there anything that you need me to go over again or talk about or discuss maybe one of your issues or a problem you may be having or trying to spot something in it? I want you to know too that I'm available to help you get through a lot of these things of the mentality of trading as well. Like clearing your proverbial desk, if you will. Taking those things, those pressures off of you. I'm going to try to get a scheduling system up. We used to use something for a while. I think Thor and I need to kind of bring that back to get this into your process, that you can meet with us and we can have maybe a session. We trade together. It doesn't have to be from 9 to 10 or 10 to 11 or, and where I'm available at that point, I will find times to make for your time. Like if you work during the day and you only have time to trade at night, during the day has a lot of volatility. There's a lot of things that can happen. There's a lot of moving parts. The at night time, from, open of the market after nadex closes to 2 o'clock in the morning has a lot of opportunity. I'm not a big 2 o'clock in the morning to 5 o'clock in the morning trader because I reserve that right for being stupid by either playing games or doing other things that I probably shouldn't be doing at 2 o'clock in the morning.
That's David Manning's hour.
Mm-hmm. Even though I've been watching him trade a lot more during the regular day.
Yeah.
No questions, huh? All right. Thor, is there anything that from...
Hey, Matt.
Yeah, quick hitter.
How's it going, man? I just think that really for I guess really like for me personally, I think it's more of really getting in here
Mm-hmm.
and really just doing it. I think that while the Zidon is nice, I think where you really start to learn how these things go and you take the guesswork out of it. And what I mean by guesswork is, like you said before, like, oh, well, I see this trend of candles going down, but you really can't explain it.
Sure.
Like that goes away when you just continue to keep just just gnawing at this thing and really trying to learn what goes on. And then I think when you do that, if you transfer over to like Zedon or something else, it makes it easier. But I think this is where it is, and this is kind of like the hard piece. And I think that it's so hard that it's easy. So
Mm-hmm.
I think it's a great idea if you guys are going to set up like some classes, because I think that when it finally clicks, I think we'll all be really, really happy. So
You're absolutely right. It's a great observation. We got wrapped up in, and I'll admit this here, right in front of all of you, getting wrapped up in the allure of trading manually to trading lot or trading like an automated system is that you you can't you can't create a system and bot that does what we do on a micro level. Like if you look at David I've asked David a couple of times, David, how come you went out on that, or what did you do there? Well, I don't know. I just looked left and just had a feeling. And for David, it's that feeling. But what is that feeling? And I've dissected it. It's something that happens incessively when you just constantly looking at the process. You see the levels there. And before you may have said, all right, well, I'm going to grab this level to this level, and that's, but you begin to see these patterns. If I gave you a naked chart, could you trade the same process? And scarily enough, I could to show you things, because I built the system, I could show you little tiny secrets that you wouldn't even need the arrows, but then I'd be out of business. Right? I'm here to help you, really, but I am also a businessman. I want you to be successful. Why do I want you to be successful? Because I want you to still pay for our system. Because I love trading and I love helping people. And the more people that we have in paying for it, the less I have to pay for it or Thor has to pay for it. We could get paid and still have and go out and help more. But the point being is that I can't make a system that's fully 100% automated that says, look left, find that level, find this. We are getting super close. Trust me. The closest I have to pure AI automation was when we had the Dex bot, where the step bot was running. I had a $5,000 a month server that was running deep learning AI sentient process, and it was creating thought algorithms behind the levels and the patterns of the movement of the market. The problem with that is when I kept on quizzing it or querying it, saying, hey, what's the best time to trade? It kept on shooting out 0 at me. Where can I trade the best time? And it would say 0. When I would query it and ask it a special question, it would say 0. And I didn't know why it was. And the programmer and I that were building it at the time said, it's saying, no, don't trade. Like it was telling us, if you want to be profitable, don't trade, from what it's seen. And it sort of, I interpreted it at that level. What you all have to do, and I know like Quick Hitter, you want to create something that will sponsor your fishing and sponsor your life. We're all looking for that sponsor process, right? Whether it comes from trading manual or trading auto, we're all looking for that sponsor. And I think what you're going to find is that what's the relevance of automation trading compared to manual trading result? See, because we're all under the misconception. How much time does it take to auto trade versus manually trade to my result? So let me ask that question. So far, yes, we had a terrible week last week. We're really getting punched in the face again this week. Okay? We had a Euro JPY fail in the last couple seconds of a trade. Okay? I feel like we've taken a real nugget onto the chin here this last 2 weeks here, because in automation trading, there are patterns that can be followed. But for our process, looking left and finding that manual system, Zedon hit a big headway the other day or last week. But myself, I made money, and David Menning made money. Others that were trading manual made money. Those that were trading and have been trading for a long time. I have this lady, Gloria, who is a very nice old lady who trades, and she only makes a certain amount per month, like the little old lady from Pasadena story, right? And I wrote her the other day, hey, did you get hit this week? She goes, no, I didn't even see anything. What happened? I was like, nothing. She doesn't use the Zedon. She made her money, didn't even think anything of it. So let me ask you a question. When you say, if you're here and you're trading, like, I can only trade the Zedon because I work 40 hours a week. Well, then I can tell you right now, you're missing out on a big opportunity. There's not a single person in here, a single person except for David Menning, who's retired and trades this as full-time. He may not have full-time income. He may have had, I don't know what his backstory is on, his financial side. I know who he is and what he's done and, that kind of stuff, but I don't know his financial backstory. If he does this full-time or if he doesn't do it full-time, maybe we'll have an expose on David Menning one day. But I don't know one person in here that's like, Max, I wake up in the morning, I do nothing but trade all day long. Him and I are probably the only ones that do that. And even I am not a full-time trader, and I'm still making between $5,000 and $6,000 a month trading on the part-time. Why? Because I can choose my time of day. I can come in at any time. Somebody says, Max, when's the best day to trade? It's like the same question of, hey, where can I find gold? And that's called wherever it's at, because gold can be anywhere, basically. In our case, if I have, let's say, an hour, and I don't really need an hour, just give me 10 minutes at the top of the hour. 2 of those minutes is really sitting down and getting ready, getting my charts up, doing that stuff. Sit down at this computer and just have a quick look and scan down. Did this set up? No. It doesn't happen this quick at first. You gotta look. You gotta go back. If you get a couple of hours, jump into the replay system and jump back and practice. It could be on the weekend. This thing fires off on the weekend. The replay doesn't matter if the market's open or not, or if nadex is open. Shoot back. Go back a month. Sit down, grab a cup of coffee a Saturday morning, and blow through this process. Go out, have fun, do whatever you're going to do. So how much time does it take from auto to manual to make the money you want to make? And I have to kind of contribute too to going to school and learning a vocation. You don't say, hey, I want to be a carpenter. Great. And then I don't got a lot of time. I got to still work at my regular job. And yeah, I want to be a carpenter, but I want to be a master carpenter. I want to be able to build cabinets, or I want to do something. You got to put time in. You got to put time in your vocation. Maybe that's what we'll call it. Max's vocation, trading vocation. Because in order for you to be successful at this, you have to put the time in. That's nonsense. If you think you're going to, if you say you want to make money and you go, oh, Max, I don't want to sit in front of the computer all day. Well, then you really don't want to make money. Because anything out there that goes, I'm going to put you in front of the computer and you only have to sit there for 2 minutes and you're going to make $6,000 a month. 1 is bullshit. 2 is even more bullshit. And 3, bullshit. You want to invest? That's one thing. You want to invest your time? Because you're going to have to invest. You want to be an investor? Great. Take $10,000, go down to the casino, put it on red. Tell them I said so. 50% of you are going to come back and be like, hey, Max, thanks a lot. Red won. The other 50 are going to be like, I hate you. But for people like Quick Hitter and others that are in there trying to sponsor their life, the gamble for Zedon is that you're going to get bad weeks like this. We thought we were going to be able to get away with just coming up with some favorite ones that seem to do well, and then put them out to everybody. And I'm not saying we're scrapping Zedon. I'm not saying that at all, because we're doing something right now. And there's some people in this room that know about it. There's some that aren't. We are creating a process to where a system will come onto TradingView and it'll grab every single trade there was for a particular time. It'll assess that value. It'll look at that process and say, all right, this particular trade has this particular percentage of availability to win, or this level of this hour of this, so we're going to have like a data visualization chart or a page that'll say, okay, this is what it is. And then it'll squeeze out a signal and send it out. That's the eventual process for us. Right now, we're in the data collection series of it. We were data collecting manually, and we're only a short period away from data collecting automated, so we can have more data structure to pick what trades do best at what times. But you want to see the winning algorithm here? Replay this video. Look at the structures. There's support and resistance. There's moving average. And there's channel. Between those three things, the basic, the signal doesn't mean anything. The signal is just a point of reference in time of movement of the market over one priority thing that we use. There's maybe two or three inside this signal. And I do this so you don't have to worry about all those fine-tuning calculations of RSI or MACD or stochastic or whatever it is that create that signal. Could be multiple things in there. Like the cherry pie. You don't got to make the cherry pie. You just need to know that it's there. And then you have to see the quality of that signal by the movement of the market and that value. Sometimes it could be pushed in. Like this is a good signal, but maybe not. This one's probably the best one out of that bunch there because it came right after that squeeze. Got a good, beautiful movement, and it won. This one, it's been filtered out a little bit now, and it's kind of, because you've had some movement in that direction. It's really super far away from the 50 moving average, but it still folds out. These kind of things as they happen, and you start to continue on, our system gets better and better knowledge each time that we have a trade. And one day I may be able to find the pattern in an automation system to be able to look at this squeeze and find this opportunity. It would take a lot of computing power, but I'm pretty sure that we could do it, but it's not today. The Zedon system is very powerful for those that want to rely on it, but you have to trade it moderately. You can't have a bunch of contracts in there. You got to know you have to use more brain power on your financial risk side than you have to use on your calculation of signal at that point. There's always a trade-off. They say that in many, many different things in the world. There's always a trade-off. If you want to be a super athlete, the trade-off is you got to bust your ass, you got to eat right, you got to travel, you got to work, you got to, right? Nobody says, nobody just sits around and goes, hey, I want to be a couch potato.
I'm a potato.
Maybe that kid does. It's the first time I added sound effects into one of these. I apologize. It comes from my gaming side. But recognizing these processes of the levels, the squeeze, the movement of the market, how to depict where that market's going to move, go back into your replays and figure those out. Start looking at them. Nothing came up yet. Start looking at those squeezes. Start looking back. When it pulls away from the market, how long does that move over a period of time? Got a nice good squeeze play right there because you have the transom of over, like everything's moving over again. And now we're heading down. Yellow's up top, blue's in the middle, aqua's at the bottom. Sort of creates that process, but then it starts to unfold here. There's no signal in there, but there is right there. And so that's a nice, beautiful signal at that point. It happens at 8 o'clock at night. If I would have came into this signal here and looked left, and I would have seen all this little beautiful squeeze, and then you have the overview right there, and then it all sets up perfectly maybe 4 bars before the signal. At this point, you could have done an at the money trade at that point. and felt comfortable. Because it's proven itself at that point. You see it. Read the history. You got it good. It's squeezed over. This one won. Now, where do I go with this one? Well, you don't really have the information of this push and the power play. Now you're just sort of coasting down the street. But you're going to get to exhaustion. And is this the exhaustion? I'd panic my ass off if it was. Wouldn't have gotten picked up if you would have made a medium. You may have gotten picked up if you would have went with high risk, but even then, you wouldn't have known. Right now, we're cherry picking it. Okay. All right. Any other questions? All right. At this time, I don't know if there's anything else that I could show you, but in trading, what I want most of you to do for this week is just to take the replay button, try to set up these processes as you go along, try to recognize them when they make themselves available. Okay. Try to find out where your opportunities are. Try to recognize that squeeze, right? Go down to every single pair, try to find those. Do me a favor. If you want to start recognizing this process, go back through, find a couple, learn how to use the tools in your chart, take a couple screenshots, put it in the room, ask one of us to validate, is this a squeeze or this is a good setup? Here's where I think it's going to go. But what you could do is you could take the process of the replay, find a squeeze, cherry pick the squeeze, and go back and find a point before a signal like 101 is going to work, and really see how it unfolds. That's a big thing, is seeing it unfold. Then pause it, make your decision. Am I going to go here? Am I going to go here? Because if you're like me, you're going to forget the way it went, right? So I'll call this one right here. This is where I want to put my trade at. This is where I want to put my trade at. And even if you're not 100% right at that point, maybe, and I could teach you how to see where the statement price would show up at. But then we hit play, see if it gets picked up. And it got picked up right there. And it came in. Oh, now it's heading down because what happened, it effing squeezed out, right? And there you won the trade. You see? So you could sit here and do this, and when the squeeze play happens, and look what happens, it came in, gave you an established environment of which way it's going to go. And now it's following what? It's sort of following that 200 or that 100 moving average right now. And there's still no signal. So you can sit here and do this. It's for every 1 second, it's 5 minutes going by. Pause the trade, see if it has a value in there, because it does have a squeeze in there, right? Let me go back to that one for a second. The squeeze was right here. It had a big push down, but again, it sort of created a level, right, from here to here. From there to here, right? It's already proved itself again, but it's doing it again. So this is like a squeeze to a squeeze because you got crossover to a crossover happening here, right? So when that happens, is that too much information? Is that too much volatility? But no, but the movement of the market, as soon as the signal came out, as soon as it hit, what is that moving average telling me? That it's going to move up. Right? So if I am going to put a trade on, I'm going to find something that gives me a base that if it does go to that, it's broken. If it breaks it, it would have to break the whole deal, and then it's just a crazy loss at that point. And that's that level right there. So that's the one I'm going to go with. And don't know if that one would have gotten picked up. Right? Ooh, crap. Wherever that was. It was pretty close. God, I can't remember where that one's at. All right. So the point is that go back to the replay, go back through that process, follow what I just did there in that 30 seconds, gave you how much information about the market. Start to spot those high, low levels of the squeeze and the support and resistance areas, and start practicing. You don't even need to go into nadex and do the demo. Just start seeing where things fall in, and then when you are trading and you have that down, you should be utilizing your other tools of communication inside this room. Don't use the Dex Atomics chat room to complain about things, or, oh, this isn't working, or the markets, or speculate the market, or try to throw in other things. Look at the signals and system that you have right now and start focusing on that. There's a reason why David's successful. There's a reason why I'm successful, is because we try to, I'm doing way too much, right? And when I really want to trade, like I'm going to leave you here at the top of the hour. I mean, I guess we can look at maybe one more. I don't know if you guys want to or not, but I want to go trade because I want to make my money for today, right? I don't want to be here teaching and explaining and doing all that stuff. I know David wants to make his money for today because he probably missed out on a couple trades this morning. All right. So if you have time, decide what you want to do. If you want to work the process, then you have to work it. I'm giving you a lot of extra tools to work with today. This was recorded. I will put it out. I have to edit it. I'm going to create chapters in it so you guys can have an easy, quick fix to go back and forth. We will put it up on the website, do all that kind of stuff. But you have to get into the mind of that if you're going to be here to trade, you've got to be here to trade. I'm not saying you'd waste my time. I'm willing to spend hours with you if you need, but you got to want to be able to do it. Get used to asking questions in these formats too. If there's anybody here who calls you out on a question you ask, then they don't need to be here. We never have any of that negativity. I don't care if you've been doing this for 10 years. Got it? All right. Thor, you got anything? David, you got anything you need to add to anything?
Me about 12 more seconds.
12 more seconds. Okay. Which one you in? Quickly. Which one you in?
Mexican. UM.
Ah, yeah, look at you.
One. Ah, shoot. It didn't.
It didn't. Oh, we lost it that last second.
Last in the last second.
I tell you, that USD Mexi, man.
It's been a rough market.
Yeah, that USD Mexi is the one thing, because look at that. The value of the, right, you had this big push, and anytime you get this big, because look, it's got the pressure, right? What level are you at? Let me guess, 89.15 area or something like that? Bummer. All right, let's drop down real quick and just have a look. It's a big, huge movement here, right? So this one you would have you would have to come back up really close because it's going to try to come back up to the moving average. Let me get that one out of there. No signal. No signal for me. Okay, we got good confluence. It's been going on for a little while. It's been adhering to it. If it is going to come back up, it's probably going to try to come back up to here. I have medium on for some reason. I'm going to put low risk back on. There it is. Got to be up right around that area. So that's the one I would go with. I have a good level there. 39.67. Per pound USD. So 39.72 is where I can get to. 39.72. That's a pretty good area to be at. That's got nice level right there. So that's where I'm going to stick with. By that time, it's going to break that moving average right there. If it does come up there to get bought, it's going to break that moving average, which then it'll create that whole level of, like, because remember, this is an area. is an area. So if it comes into this area, it could still use that as a push off to continue to go on and create pressure. But I don't see a lot of pressure happening. We don't see a lot of crossing there. But if it does come back up to here, that moving average right there is going to be pointing upwards at that point. So if I am going to do something, it's that 72 area. So that's the one I'm going to go with. Right there and at 45. All right, let's come back down to USD/JPY. Nothing there. Did we get anything bought up on? Yep. We're looking at Great Britain pound JPY. Oh, because it's on a unvalidated. That's why. Let's go have a look at that. It's on the sell. Let's see, on something like this. Wait. Did I do that right? No, it's not unvalidated. This one's validated. Great Britain pound JPY. Which level did I get that at? 151.14. 151.14. It's way, okay, right there. Again, there's not a lot of information to the left. Again, that's the process that's happening from ZDON right there. It's 115. So there was 14 available, came down 1 pip into it. That's okay. All right, well, I'll leave that one on there. That's a pretty good one, but I think we're going to be really pushed. It's going to try to come back up, but I think it's only going to come back up to like right at the top. Like it's really dropping fast right now. All right, let's go down and try to squeeze in and look at other ones. This one. So let me ask you, folks. You had the pressure. It's already happened, right? From this level, it's already been pushed out. It's already been committed to. What do we know about the pair already? We know that it's volatile and it'll try to come back down to here, right? If you are going to put a trade on, I will not put a trade on this one, like I was saying about the Mexi before, because it has a lot of high volatility to it. If I were to do something, it would have to be super far out to be picked up, right? Almost to the point of pair exhaustion, right? That's where it would get broke. And here's where I would probably put something if I were to do it at that point, right? Because it does have that level to look at, but it doesn't really give me too much. There it is right there. Boom, boom. That's the top level. If it is going to come back, it's going to try to come back, but by then it'll be at this level to push off. So if you were to take a little higher risk trade, this is the level I would be at 25.38. And if you were going to try to pay it safe, it would be 25.19. A difference of 19 or that. So 25.20 to 25.38, right around 20 pips difference. But again, 20 pips difference between those two levels, and then you go to the USD CAD, and what is the statement spread? 20 pips. Got it? So, all right. I think that's it. USD CHF. I haven't traded Swissy in a long time. It's kind of mixed up at the moment. There's no signal in her anyway. But look at this, okay? Because I want you to see this. Is even here on this one, on this particular signal right here. Let's look at. We'll establish our level here. Right in that area. Right in that area. We see that those are the two major areas right there. Signal comes over, kind of stays flat, right? Because we don't know, because this is when the signal came out right here, which we have to kind of look back from here to here. You know, it's kind of up and then it goes flat a little bit. So this is not something that I would probably have gotten into when the bar first signaled. But right here, maybe I would have. But I don't know if that would have been enough for me to be able to get in at that level. right? But a good safe area to trade at that point would have been up here. This would have been a good level to be at. Now, if I was a Forex trading person, I would have traded once it broke that support line there. I would have came back up, put my stops in right over here, and that's where I would have traded because of this crossover process. But again, you've had a couple over the last several hours. I could do this all day. I do apologize. I did say I was going to go. This is how volatile that market is for the Mexi. I hate the Mexi. Doesn't make me racist. I just hate the Mexican USD, Mexican peso. All right, I'm going to let you all go. If you do get into any trades, put them into, make sure you're utilizing those tools, right? Utilize these tools in front of you. Okay.
When do you think you might be available to do this again?
Every day.
Okay.
I don't want to keep repeating the same things. I'm just going to come in and do market reads for maybe 2 hours. We may be able to do it a little bit later in the day. It's going to be all impromptu, like I said last week. You know, I'm running this company. I'm running my wife's, helping her with her marketing for her real estate company. I have my kids. You know, I make stuff. I build. I play games. I do a lot. And I'm staying with that because I want to show you that if any of you go, hey, I'm too busy, unless you're doing the kind of level stuff, I'm not saying I'm better than any of you, is that if I'm going to make the time to trade, I'm going to sit down and trade. That's why I'm going to go do it right now. Right? I got one trade on, and so I'll kind of let that set for now. But on my account, I have a couple of trades on, and I want to make sure that, you know, I'm in the right areas, and I got to go do all that stuff. When I want to trade, I got to sit down and do it. And this is one of my favorite times to trade is right here at the close for the UK market and later on in the night. Doesn't mean it's the best time. It's just my time. All right. And then we're also, Thor and I are going to have to talk about building out the booking system. So you guys can take some time and, you know, if you could trade at like 8 o'clock, I may not be available for 2 in the mornings and all that kind of stuff, but we'll make some time for those that want to kind of go through things and ask questions and that stuff. Because I know some of you are really difficult to ask questions here. You rarely ever do, and I understand, right? But in order for us to get to a level, we got to get past that feeling of anxiousness or what have you. Okay, because there's nothing in this world that you're going to go in and trade, and you've all made mistakes. You've all made huge mistakes, and I included. That's why we're at where we're at. We've learned these lessons. And I'm not saying that you're not going to learn lessons along the way. You're going to follow what I say, and you're still going to learn a lesson. All right. You guys have a great day. I'll talk to you all real soon. Keep an eye on the market or in the room here. And also, share your experiences with others. Remember not to use these rooms as complaints, but to use them as positive influence on the process. Even if you have a loss, it's okay. And there's nobody in here besides David, myself, and Thor, and Paul, and a handful of others, unless you're doing super, super well, we should ever be criticizing anybody else's trades. I will be the only one in there if there's something really bad, you know, that'll come out and really say anything. I know others will talk about it as well, but you'll get a message directly from me. Okay? So if any of the other traders, if you see there's a problem with what somebody's making some pretty bad decisions, just write me, and then I'll contact that person, or Thor, or Paul. Okay, even David. But for the most part, leave it to the legacy partners to help you get to that next level. Guys, have a great day. I'll talk to you all real soon.